Well, hello everyone. This is Matt Kreifels with the ALEC department and CDE coordinator for Nebraska. And we wanted to put together some things around the farm and agribusiness management career development event, in particular around the team practicum that we'll be piloting at the 2022 FFA State Convention and the career development events. And so just a quick bit of history, Farm and Agribusiness Management is the only CDE that doesn't have some sort of team component or collaborative component to it. And the goal of the UNL Ag Econ department is that they can bring something to it that would allow students to do more than only the multiple choice exam that currently takes place in the event. So again, for 2022, this is a pilot, and it will not impact the team scores and determine who goes to national FFA convention next fall. But it will be still graded for all those that do choose to participate. And we're told that there's a scholarship associated with it as well. And so we'll get more information out about that another time. But I'm excited to see the Ag Econ department looking at putting some carrots out there for your students to participate as well. And so with that, please know that if you were to look at the CDE schedule, that currently this event, I'm going to share my screen here, pardon me. Let's see here. I'm going to share my screen so you can see exactly what the calendar is. On the CDE website, if you were to take a look at that and then go to the calendar and look at the schedule, you'll see that the Farm and Agribusiness Management event takes place on Wednesday, April 6th. And there are two different sections or time sections that your school participate. So districts 7 through 12, they have a check-in time of 5 p.m. Districts 1 through 6 have a check-in time at 7:15 p.m. And it is an option and encouraged for any school that has a Farm and Agribusiness Management career development event team that they would also choose to do the optional pilot. If they don't, it won't impact their scores at all for the main event. But we want to be able to pilot this in as a realistic environment as possible. And so the optional pilot will then involve districts 1 through 6 checking in at 5 for that pilot in the Philly Hall trading room, which is connected to the dairy store, and district 7-12 will do that. So basically they'll flip-flop between the main event and the optional pilot, and we'll participate that way. So that's the mechanics of it. But here to tell you about the details of what the pilot involves and what students are expected to do is Dr. Jay Parsons with the UNL Agricultural Economics Department. And so I'll turn it over to you, Jay.
Hey, thanks, Matt. And I'll just share my screen here and show you the setup for this. Maybe did it show up?
Yes, we can see it. Thanks.
Okay. So this is basically I guess a modification of what we've done for the Nebraska Agricultural Youth Institute, which that takes place in the summer each year. And as a part of that, I put together a farm management simulation game that runs throughout that week over multiple years. And so since this is, a tighter time window that we're working with for this event, we're going to modify that down to just a single year and work with some different pricing points. So this is still being finalized in terms of how everything getting plugged in, but I'll give you a run through of kind of the general idea behind it. And if you have any feedback, we'd be happy to hear about it because it's still a work in progress. So the premise behind it is we set the students up with a farm, and on this farm they have basically 6 fields to manage, and so we give them 160 acres in each field. That's just to give us a nice big number to spread costs and revenues across. But there's 6 fields to manage, and one of those fields is planted to alfalfa, and That alfalfa field, of course, is a perennial crop, so they can either keep growing alfalfa or they can tear it out and plant something new. And the other new crops that they have to choose from are corn, soybeans, and wheat. So essentially, we set them up with 6 fields, and each of those fields, they can, as I said, establish either keep the alfalfa or not. And then wheat, there is a caveat on wheat that you can't plant wheat after corn. So essentially, we say these are the fields and how they were planted in the preceding year. We're starting a new production year, and you decide what to plant in each of these 6 fields, including the option of tearing up your alfalfa and planting something different, or planting corn, wheat, and soybeans in the other fields, with the idea that you can't plant wheat in field 1 and field 3. So we set this scenario for them, and then we work them with oh, sorry, I also need to mention, they have the ability to feed cattle on this farm also. And rather than messing with the cow-calf situation and that, you know, the time lag in that and all the things associated with that, we just give them the option of feeding 300 head of cattle in a feedlot. So they can buy calves in at 150 pounds and feed them to a slaughter weight during the course of the year. So crops and livestock are integrated into the farm setup. And then from there, we'll provide them with basically the expenses attached to each of these crops. And this is an example for corn. And we also give them a detailed layout on the labor as that's spread throughout the year. And so say a little bit more about that here in a second. But they have cash expenses and attached to that. And they're a little bit different if it's corn on corn or corn after wheat, because they got to fertilize a little bit more. And we give them expectations for yields, and we give them some crop insurance information. And when we do NAYI, because we go out 3 years and have a lot of different stuff happening during the course of the week, we just tell them they either turn crop insurance on at 70% revenue protection or turn it off. For this event, because we're only going to do 1 year, we're going to give them at least a couple of different levels of crop insurance that they can insure at and costs attached to them. So whether they want to pay more for more protection or pay less for less protection. So we'll have that option available to them in there. But we have this for each of the crop sets, so they'll be presented with this information for soybeans and then also for wheat. And then for alfalfa also. And the tricky part on alfalfa, of course, it's established. So there was some cost in establishing, and that annually you have quite a bit of labor attached to it because of the hay being put up. But it's a fairly profitable crop on an annual basis once you have it established. But you know, with high corn prices and high soybean prices, it's pretty much you know, a tough call on whether you take it out of alfalfa production or leave it in it. Now, the alfalfa and the corn can be fed to your cattle if you grow it, and most people do grow corn, so that's kind of a no-brainer. But you can still feed cattle without having alfalfa. You just got to buy it in. And what we do is we basically charge them a little extra to buy it in. And the other tricky part I shouldn't say tricky part, the other competitive part on the alfalfa, and we don't know what we'll have for teams for this. When we do NAYI, we have 8 teams. And so I structure this based off of what 8 teams would produce. So if 8 teams basically stayed in alfalfa production with that one field of alfalfa, they would produce somewhere a little bit more than 8,000 tons of alfalfa among them, right? And so if everybody stays in alfalfa production, even if they feed some cattle, you'd have to have quite a few cattle fed before it dropped below 7,000. The alfalfa prices actually take a little bit of hit because you got a lot of alfalfa in the region and not a lot of demand for it or excess supply, let's put it that way, so it lowers the price. And NAYI would give them the option of getting out of alfalfa production, and as teams drop out of it, prices become more favorable if you stick with alfalfa. But that's a competitive thing. They don't, you know, sometimes I've done that and had I've had almost, I think the least I've had is 1 team drop out, but there's been times where I've had like 5 teams drop out of alfalfa production, and the teams that stayed with it ended up with favorable prices and making decent money on it, but you don't really know. That's the competitive part of it. And you don't really know how many people are going to be feeding cattle either. That also affects us to some degree. So we'll play with these a little bit. And again, we don't know how many teams are going to be involved there. We'll know more really after we go through it this year on how you might want to refine this for future years to make this part of it work really well with this type of audience and the number of teams that we have. On the cattle side, as I mentioned, they're just going to buy them in and feed them. So again, there's labor attached to that, and we might adjust that a little bit here, given the scenario that we're working with the 1 year scenario. They do feed corn, they do feed alfalfa, but if they don't grow it, they can just buy it in, and then they're going to purchase in feeder cattle as a big part of that expense. So this stuff will be presented to them. I should mention that all of this budget stuff, we just released our new crop budgets, and these are based off of specific crop budgets that we released from here at UNL. So these will be updated by the time we do this for real in early April with our new 2022 expenses attached to them. And then the labor that they have available, we're going to assume that they are an owner operator of this farm, and these are roughly the hours that they're going to have available during that period. And if they exceed this, they can purchase labor at $25 an hour. And we give them a flat $60,000 living expense charge to the entire farm, basically for the owner labor that they provide. And then again, they can hire in labor throughout the year at $25 an hour if they need it. We make some capital assumptions. We make some assumptions that they get $75,000 worth of capital coming into the year. I may adjust this a little bit. This is right at the cusp there, depending upon what we do with the budgets and because the costs are up a little bit this year. But if they go heavy in corn and soybeans and alfalfa and cattle, they'll get up above $800,000 borrowed from the bank. So they got to do some math and see what those expenses work out. That's the competitive part of it. If they go above it, we don't put them out of business or do anything super nasty to them other than be a loan shark and charge them 60% interest for that excess. And as a side note, I did have somebody actually win this contest in the NAYI that exceeded the $800,000 limit in the first year. They, not by much, they were only over by about $10,000, but it cost them quite a bit of interest expense, but they managed to get through that and still ended up winning the game at the end of the week. But you know, flat 5.5% interest on that operating money. And again, if they exceed that limit, they need to be careful there. Corn and soybeans by far push that up. And then the cattle does too, if they get heavy into cattle. On the land, we charge them, we assume half rent, half ownership. And so this is just kind of a learning point as we go through. They can't really control anything with the land costs themselves. But we're just going to provide this to them, and then, you know, have a little bit of a learning event there in terms of the fact that there's a land debt that they have a payment on, and then there's cash rent that they have a payment on for the rented land. And all told, this comes into a whole bunch of different cash situation where you have cash flowing out, but part of that is covering the principal costs. So the actual cash expense, when we go to figure the contest, is at $210,000. But in terms of that operating loan and that $800,000 limit, they got to consider the $240,000 in there. So this is more, they can't really make any decisions off of this, but they do have to take this into account when they're looking at their total loan amount. And then let's see, I already mentioned this piece right here that they feed the hay and the corn that they grow. And if they don't actually grow it, they can still do the cattle. We just add 25 cents to the price of corn and charge it to their cattle enterprise. And we add $25 to the price of alfalfa per ton and add that as an expense. And so as I mentioned for NAYI, this is a 3-year thing. We're planning on just doing a single year for this event and adding in a pricing point in the middle of the year where they can do another pricing event. But the way it's set up right now, we tell them this is what you have growing in each field. So your team needs to decide what to grow into the next field so they can, you know, next year. So they can decide to keep the alfalfa, maybe follow corn with soybeans, like a regular good old crop rotation producer, follow soybeans with corn, maybe put wheat after the soybeans there, and then come in and put corn in the wheat field. But they decide what they want to grow. They need to keep track of what that means in terms of their total expenses. And then they need to decide if they want to basically price any of it. So for example, let's just say corn had an expected price of $4.60, and that'll be adjusted a little bit. We'll offer them a contract price, and then they decide if they want to actually contract that. So, and how much they want to do. So in this case, they got 2 fields of corn for 320 acres, 230 bushels an acre, roughly 73,000 bushels. So they might decide to contract about half of that. Okay, so they'll decide on each of the crops based off of the production, how much they want to contract. So soybeans, in this case, we only got a couple fields here of soybeans, 20,000 bushels. So maybe they do 5,000. We kept a field of wheat, so that's 13,000, maybe to do 5,000 bushels of wheat. But we'll give them that choice there in terms of saying, how much of this do you want to lock in a price for? And keep in mind that if they don't produce it, they got to, fill that contract somehow. So there'll be some fill there. And then they also have crop insurance to attach to each of these crops. So they'll fill that in too. And as I said, right now we have it for NAYI, they just turn on crop insurance or turn it off, but we'll give them different levels of revenue protection that they can choose from here and prices that go with it. And then the last, this is the actual thing that's built in there. I forgot I left that in. That's at 70% revenue protection that we have built into that, but we'll adjust those. And then the last piece is the steers. They'll decide if they want to get into feeding steers. They can go up to 300 head. So if they wanted to do, they don't have to do all 300. If they do 100 head, they'll have numbers attached to that in terms of what they'll have for expected price. And then we'll give them the option of putting LRP insurance in it, which basically has a premium attached to a price floor. And they can choose to turn that on or off. And we'll put at least 2, if not 3 different levels of coverage that they can attach to that. So that's how we kind of anticipate the initial round of decisions looking that will set them up on this farm. We'll give them some background on it, and then allow them to argue and discuss on how they want to set that farm up. And then we're still working on how we're going to put a midpoint pricing opportunity in there. So this would be like at the beginning of the year, everything's set up, but we'll probably hit somewhere in June or July. At that point, it wouldn't make sense to forward price wheat because you'd be harvesting it then, but at least put in a pricing opportunity for some more corn or soybeans pricing there, and maybe on the steers, because at this point, all they would have is LRP insurance on it, but the option to lock in the output price for those also. So that's pretty much what we have in mind for it. I don't know what kind of feedback people have on that or anything, but it's a pilot project, right? So we want it to be interesting, want it to be competitive, want them to learn something about it in terms of how these things work as far as putting protection in place and then some of the risk involved. So all of these decisions get plugged into a spreadsheet. The spreadsheet, we have a simulation set up in there where we do a random draw of prices and yields, and then everybody gets the same price and yield in terms of what happens in the cash market, and their decisions get then figured into how their farm actually turns out.
Thanks, Dr. Parsons. Dylan, I know you're the only teacher on the call. This is going to be recorded and sent out to everybody. That's what most people elected to do, but if you have a question, please unmute. One question I had, Dr. Parsons. So when they walk in the room, they're going to be 4 students on a team. And I think the conversation has been that all 4 students will be able to look at the same information, and they'll talk as a team and make one team decision. So they're essentially going to be listening then for some time to you to set all this information up. And then they're just typing into a spreadsheet on the computer, or is there something else they're filling out?
I think what we'll do, we'll probably have something in front of them on the computer to help them with some of these calculations and stuff. At NAYI, I leave it up to them because they go away as a group and meet for like a half hour to do this stuff. And so they're doing it all on pencil and paper, right? But Elliot and I haven't visited on those details, but what I've done in the past is have them fill out a sheet. That's the easiest thing, is that at the end of the day, they fill out a sheet, and then we enter it into the spreadsheet and then present the results to them as we go through it. So that's what I anticipate this being. We do have other simulations where they actually play it on their own on computers, but given this is just a 1-year set of decisions, and then, like I said, the intermediate marketing decision, I envision it sticking more with this spreadsheet. Here, fill out your decision set, and we'll enter it, and we'll see how you do.
Okay.
Okay.
What do you want students to bring with them to the team portion of the event? Should they have their calculators with them?
Yeah, the calculator would be really handy, because there's what typically happens is you have somebody crunching a bunch of numbers. In particular, you have people worried about the debt limit calculation, labor. That one gets a little tricky, and that's something that we might have to set up to be fair, set it up in a spreadsheet for them, so that because that's a lot of numbers to crunch when they do that one. And those are the main ones. And then some of them get into the, just some of the cost stuff, but most of that they can intuitively maneuver, but certainly keeping track of their total expenses and looking at how their labor parses out is important.
Okay.
And having a calculator there will be handy, because it's just one person sitting there pounding the keys on the computer, or the other. There's always somebody wanting to punch something into a calculator to say, hey, wait a second, you need to think about this.
Sure. We have scratch paper available for students as well.
Okay. Yeah.
Okay. What I'm trying to think from a teacher's perspective. I want to, set my students up for success so they feel competent and confident in what they're expected to do. Could you just verbally describe what are some of the things that, as a teacher, that I'll definitely want to teach my students in terms of specific calculations or those things? And if you want to pull up a sheet, I think it might just be good to list those things out.
Yeah, in terms of just what I guess, let me make sure I understand what you're asking. What they should be thinking about as they come in, and what they're going to learn when they go out, or both?
What should a teacher be prepping their students for between now and April? What are specific calculations that you if you were teaching students from square one, that you'd want them to know?
Right. So in terms of, like, if you have a cost, what it costs per acre, the things that they have to adjust on there is really that we'll give them a cost per acre, and there'll be two options on there depending on what they actually do. So you can think of it like in the corn. If you go corn after corn, you got to apply a little extra fertilizer, so the cost is higher. Okay. So look at the differential and what it costs per acre to grow a crop, and then your total costs as they go out. Now that's just arithmetic, multiplying acres times costs and looking at the differences between them. So if it's $100 cheaper to grow one crop than another, that, if I spread that across these acres, it's 16 grand or something like that. So realize those trade-offs. And then also that if you, some of these inputs, so for example, the hiring labor, I've had groups that say, I don't want to go over my labor limit, because then I got to pay $25 an hour for labor. Okay. But hiring $25 an hour for labor to turn around and make $200 on that labor because of the crop that you're growing is a good trade-off. So realizing that there's crunch times during the year where if you grow a lot of corn, you're going to be busy when you plant corn, you're going to be busy when you harvest corn, but it's pretty easy to hire $25 an hour labor to help you with those two tasks if it means that you're going to make money. So just understanding that some of those trade-offs are there, that if I take this field, is because we tend to think of things in marginal sense as if they're continuous, but the reality is farmers plant fields. So if I take this field and plant it to that crop, I might go over some limit here and have to hire some labor, but the big difference of being 160 acres of corn versus, say, 160 acres of wheat, it's worth it. And so understanding those types of trade-offs is important. That makes sense? I don't know if that answers your full question or not, but
yeah, I think that's good. That's good. And again, some teachers, just so that they take their 4 students on the team out of a class, and so they're in a farm and ag business management class. Other teachers, they'll bring students that these 4 students may not all be in the same class together, and they may have taken it before, maybe never taken that class. And so they're working with and training their teams. They're trying to make sure that all students, have the knowledge and skills necessary to feel good about their performance in a career development event.
Yeah. And to be honest, marketing makes such a big difference in how this turns out. If you get 50 cents more on bushel on corn, you're going to kick somebody's tail that doesn't, right? And one of the things I've noticed on this, and I've noticed on other simulations too, that I've done with students, is they tend to go through and they calculate and say, oh, I can make money on that. And they lock in the price because they don't want to take a risk. And in locking in all of the price, they're also locking in the profit potential. And then when prices go good, they lose out. So that's the other piece to that, is realize that there's a random draw of prices in here, and so they can go up, they can go down, and certainly even though you're locking in a favorable price point, that doesn't necessarily mean that that's going to work out to be the best outcome. Okay. And so realizing that there's some value to diversifying your pricing and not putting all your eggs in one basket is the other piece. So.
Well, because they're writing this all down, you probably won't, the students and teams won't know how they performed that the same day or the same evening that they're participating. Is that correct?
No, we'd be able to give the results to them.
Okay.
Yeah. So it's, the way this is set up is it's pretty easy for me to pop in the result, because this is a finite list of decisions, and I got a spreadsheet all set up that for the teams I can pop those in, and then we can pump the results out pretty quick. So
Great.
Okay, so that's my plan anyway. If Elliot had something else in mind, we can work through that.
Yeah. Well, just to let you know and let teachers know, if for some reason that there's not enough time, we also could distribute things in either of the award boxes if it's a physical thing, or do something to send out to teachers after the fact as well.
Mm-hmm.
Just to let you know, Dr. Parsons, in 2019, the last time we had an in-person event, there were 87 teams that participated in the Farm and Ag Business Management test.
Mm-hmm.
We're hoping, I would expect somewhere around that same amount to participate in the traditional event. And then of those, a subset will choose to also do the pilot this year. So it would be many more teams than what you've done at NAYI, but also it's a smaller problem. So
Mm-hmm. Yeah,
not half at a time. And teachers, just to know too, your students may need to just know they might have to wait for other teams to finish before they can go into the room as they figure out what the rotation schedule is.
Oh, okay.
So
Okay, and you split them, if I saw that correct, you split them into 2 different groups. Is that right?
2 different batches, so 40 or so teams in each batch, but I don't know that you can fit that many in your room at a time.
Yeah,
so,
a room only holds about 40 or 50 kids. So
when Dr. Dennis and I were talking, he was thinking of some sort of rotation between there. Teachers, this is all to say we're really happy to do a pilot because this will allows us to work out some of the
yeah, that's important, because how we do that, and yeah, so we'll have to see how we set that up. So they might have to wait for their results, but I could see us doing it. I could see us doing it in a number of ways, because the template I have is set up for 8 teams, which isn't that big of a deal because it's an Excel sheet, right? So it's no big deal to have different files and, take them in groups and put them in that way to make it work out. The difficult part would be letting them know how they did, right?
Yeah.
And so I don't see any problem letting them know how their team actually, like what their bottom line turned out to be. I think that would be pretty straightforward if we wanted to do that, but know where they are in the standings, that would be a different story. Because we'd need to get everybody processed through to do that. So okay,
and like
that's good.
At the beginning of the call, it sounds like the economics department has some scholarships, or a scholarship, or maybe multiple scholarships that they want to attach to this. So we'll provide more information on that, but let your students know, like, this could be something that isn't just good to know from a skill perspective, but also might help launch a career in this area as well.
Yeah, and we don't know going in what's going to happen with the prices on the simulation. So I've done it where I've done it where everybody got rich. I've done it where they've had really bad prices, and if they didn't buy insurance or didn't forward price things, they lost a lot of money because the margins were pretty low. We don't know. We just let the computer decide that, but that's part of the messaging, and that's tough to teach in a 1-year simulation with students. You can't. That's tough to do, but anyway. But it's a message.
And teachers, we appreciate you, prepping your teams and electing to participate in this team pilot event. We will also want to follow up with teachers after the fact too, regarding what their students' feedback was to you, and then for you to pass that on to us will be important. So again, we're really looking forward to adding this. The goal, the hope is that this might be something that would be a permanent part of the event and part of the entire team score. that would impact, who goes to nationals in the future. And this is a way for the Ag Econ department, you and your students to kind of ease into it as well. So, well, that's all the questions I have, and I don't see anyone online that's unmuting. And so, Dr. Parsons, any parting comments or thoughts?
No, we're just looking forward to giving it a go. And like I said, it's a pilot, and happy to adjust. It's a great way for kids to learn some of these decision-making things, but keep it fun, but, put some value and I guess do some number crunching.
Yeah.
So,
well, teachers, we look forward to having your students on campus and in this event. And please don't hesitate to reach out to the superintendents of the event as you have questions. Their email addresses are on the website as well, and I'll put them in, drop them in the email when I send this out. So thank you, Dr. Parsons, and we look forward to seeing how this all rolls out.
all right, thanks.
All right, thank you.